Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so little consolidation over the last going on 15 sessions now. Move up to the 200-day exponential moving averages, printed as high as 29.65. The bears fought that off. They got it down as low as 27.71, and they had, like I had mentioned it Friday night, mentioned it Sunday night, mentioned it yesterday morning. If they could win the battle over the middle band, they had a real advantage to retest some downside. And in true bear fashion, they just totally blew it. I mean, they totally blew it. I mean, it's what the bears do. They specialize in totally blowing stuff. And they did. And I wasn't rooting for them one way or the other. It's just after 5, 8, 10 years of doing this, watching the bears just trip over green grass and fall on their face so many times, just, it becomes very, very, it doesn't become predictable, but it becomes, not surprising. So you can see here on the daily chart, the green line is your daily mid-band, and they couldn't get it done. The bulls have reached past the 20, past the 50, which is the red line, past the 9-day, which is at 28.53, and as I pull up the weekly chart, you can see what they've done is they've gone ahead and they've taken it all the way up to the new weekly pivot at 28.64.58. I mentioned in the room yesterday that if this kept up, we would certainly see weekly pivot in the next couple of sessions. I really didn't think we'd have already been there and done that by the time I woke up this morning, but there it is. So now you've got resistance at the weekly pivot. The problem is you've got support, you've got retested support at the hourly midband. So hourly midband here is at this low 28.32 and change. You can see they spent yesterday, the latter part of yesterday, creating support at the 20-day simple moving average, the daily midband, then the 50, the hourly midband, all of it, every bit of it, the roundy, and they've built off of that into a nice little rally. Now, is this all some larger bear flag that's going to fail? I don't know. Would seem to me you'd want to be trading below the hourly midband if that was going to happen. So one of the things the bears are going to have to get done today and early on is they're going to have to convert the hourly midband to resistance. I mean to say the daily midband a couple seconds ago. The hourly midband. If this is a bear flag that was going to fail, you would expect it to convert the hourly midband pretty quickly and pretty efficiently. There's nothing efficient about that right there. So they're going to have to deal with this line. They're going to have to create a lower high. They're going to have to make a lower low and then start to build back towards some of these bigger areas like the 50 and the 20, convert them, deal with the roundy all over again. And let's not forget, we're 55 handles above there now. And try to build some kind of a week. Now, if they can't do it, if this holds, if the 9-day holds, if the weekly pivot converts to support, then we are walking back to stuff with 29s on it. Right, wrong, in between, the economy this, COVID that, earnings this, price is price. And trying to pigeonhole logic into price in certain situations tends to not work. You tend to be the smartest guy losing money. So just go with the flow. If the bears can't stay underneath weekly pivot, if they can't stay underneath the 9-day, if they can't efficiently convert the hourly midband, then the bulls remain in control. It remains a dip buy market, and we're going to keep doing what we're doing. Remember, square one of the baseline assumptions that I make about markets being either dip buys or rally sells is based upon the reaction at the daily midband. We fought over it all day. I had a miserable day yesterday. I had a great afternoon. We had a great last trade of the day, and there were a couple okay ones in between. But aside from that, there was blood yesterday. It was not an easy day for me to trade at all. I ended up red. It was a red day for me. Not very red. We salvaged most of it, but it was a red day. I don't like short-term trading, long-term inflection points, but that's exactly what this was yesterday. But my point being, if that's converted now to support, then that baseline assumption is that the mini, the S&P, is still in dip buy mode. And if there's a dip to buy, they did it 4 a.m. If there's a dip to buy, this will embolden the bulls to do that. These things will convert. The bears need to be on their game today. They need to put in a day. And, after what's happened overnight, I don't know. But the gateway to that, to being able to do that, is converting that hourly midband as quickly as possible this morning and then holding it. If they can't do it, then the chances of printing stuff with 29s on it, maybe not today, but tomorrow into Thursday, are pretty good. Deal with the hourly midband. Everything else will follow. At least to get back to 28.15 or get back to 2800, and then, they're going to have to fight off dip buys all over again. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.